Alrighty, folks, you heard it here first. It is now being validated by more and more economists that the housing market in 2025 is dead. Yes, you know that one of my long-term calls for 2025 is that the existing home market will produce results that are at the cycle low, being below 4 million. Now we've got the one and only Mark Zandi, chief economist at Moody's, basically saying, Zuber, you are right. You are early. Maybe even you are amazing, but, I'm having just a little bit of fun with that. He is saying, and quoted as saying, rates at 7% plus mean the housing market is dead. No kidding. And then he says, quote unquote, no one is going to buy. Folks, I think we are going to see some very significant drops in home sales transactions as we start the year. And that will set us off on a course to sub 4 million. Mark goes on to say in this article I read that rates are to 6% or below to see the housing market come back to life. Again, I think we have actual evidence of this. If you and I step back to, I think it was in Q3, maybe late Q3, we had that little 1 or 2 week window where rates got down to 6.11%. Remember that? And the housing market just lit up on demand. And again, I think we're going to be above 7% on average all year, probably a significant portion of first half. So it's going to be exactly what I called for. And again, let me remind you, if you're on my channel and you come back and watch every day, first off, thank you very much. I appreciate the support. When I say things like transactions for existing home sales will be below 4 million, I frankly hope you get a smile. I hope you're smiling because, again, what we talk about day in and day out doesn't change. Get a buy box, look at it every day, figure out average, write great deals, write disrespectful offers, follow up. The process doesn't change. Trust me, you want to interact in a buyer's market. You want to write creative offers. You want to write offers when nobody else is out there. This is our market. If rates go to 8%, we don't care. We only write deals that make sense today. And yes, we are not above writing disrespectful offers. 15, 20, 25, 30, 35% below list price. Who cares? You're the buyer. You are seeking a motivated seller. And I just want you to enjoy the process. Yes, it's work. Yes, it's monotonous. Yes, it's boring. Who cares? Do the work. This is what you are supposed to do. Last thing that Mark said before I went on my sidetrack, I apologize, was rates might actually have to go higher before they start to moderate. So again, the housing market is dead. That is a quote from Mark Zandi. I just want everybody to realize when folks are giving Mark his flowers for being right, I want you to come out and say, no, Zuber was right. Zuber was early. He told us this was coming months before anyone else. On that end, Fannie Mae is out with some very interesting calls as well. Fannie Mae says or sees near-term existing home sales at or near the lowest levels since 1995. Now, something I had meant to do before I started this live stream and didn't, I apologize, was I wanted to go to my 50-year spreadsheet and actually look up the number of transactions from 1995. I don't have it with me. I'm live, so I can't do it right now. I apologize, but I will certainly be looking up for existing home sales 1995. If you have the spreadsheet or haven't gotten it yet, it is free. It is extremely valuable. It is, frankly, that spreadsheet is what I leaned on to make a lot of my housing calls over the last 4 years that, frankly, have been nailed. We've got them right. And it's actually what I leaned on to call 2025 the lowest of the market. So if you haven't gotten that spreadsheet, I don't know what you're doing. We should frankly charge for it, but we won't. Go get it. onerentalatatime.com. It is free. But yes, another thing that Fannie Mae is calling is 2025 interest rates on 12/31/25 will be 6.5%, kind of halfway to 6. And 2026 won't be much better. They're calling 6.3%. Yeah, housing might be broken for a while. That's what that tells me. Folks, we obviously have our Vegas event. I think it is 24 days away. We are down to only 40 tickets remaining. There are lots of you that have been telling me you're going to buy tickets and you haven't. We now have 1 VIP ticket left and 39 general admission. Please buy the tickets, sell it out. So A, I can stop talking about it. That would be cool. And B, you know you're going to be there. You want to be there with all the millionaires. You want to be in a room with 300 people going in the same direction. You just want to be there. And of course, I understand it's expensive coming to Vegas and all of that. So the other option is buy the virtual event. $99, no better way to go. Go to Eventbrite, search One Rental at a Time. I don't know. Don't miss out. 40 tickets left. Let's sell it out. Let's get to the event. Folks in the Bitcoin community, you may have a new champion. There was a Ray Dalio interview where he talked about alternative money. And in that conversation with alternative money, he included Bitcoin and gold, which I believe, I don't know this for sure, but that's kind of a pivot, a tweak for Ray Dalio. He now sees Bitcoin on the same playing field as gold. And Ray Dalio's opinion is you should have alternative money at 10 to 15% of your portfolio. Now, to be clear, he is not talking 10 to 15% Bitcoin. He is including Bitcoin with gold as alternative money. So again, if you have any questions, it seems like the powers that be, the big shots, are coming around. Again, I put 1% of my net worth in crypto in 2018. I haven't done anything with it, won't do anything with it because I consider it an insurance policy, not a trader, not even considering it an investment. It is an insurance policy against government stupidity, which we seem to have a lot these days. What else we should talk about? Let's talk about some earnings. Don't know if you saw it yesterday, but part of the Mag 7, I actually know, is Netflix in the Mag 7? I don't remember. It may not be. I have no idea. I don't follow stocks. But Netflix beat top, beat bottom, and added 300 million subscribers. Also, if you have Netflix, which Olivia and I do, they will be hiking prices. Boy, more inflation. Hiking prices on both standard and ad-supported tiers. So Netflix likely to continue printing money. Procter & Gamble beat top line, beat bottom line on growing demand for household staples. And United Airlines beat top line, beat bottom line, and raised guidance. Folks, earnings season, earnings season starting off pretty good. Earnings season is starting off pretty good. We've got a comment from David Einhorn. David Einhorn saying, we have reached fart coin stage of the market cycle. The recent election of Trump has unleashed a storm of animal spirits on Main Street. I thought that was an interesting reference to fart coin. Yes, he said fart coin over and over, basically saying we are going nuts. It is reached a very stretched market scene, but also highlights that the animal spirits on Main Street has been unlocked, which I think will have very interesting implications across many asset cycles. Jamie Dimon coming out being kind of a downer, although he's been a downer for a couple of years. Remember 2 years ago, I think Jamie Dimon 2 years ago said a hurricane is coming for the U.S. economy. And oh, by the way, if you're not paying attention, the stock market went up 20% 2 years in a row. So I would say that hurricane call was wrong. But what is he saying today? He says that the U.S. stock market is kind of inflated, feels cautious about risks of deficit spending, inflation, and geopolitical upheaval. Well, it is my hope, and you've heard me say a couple of times now, I'm hopeful in the next 90 days We have all of the wars and skirmishes happening across the world are behind us. Peace reigns down on the world, and we can remove geopolitical upheaval from a risk factor. I think we should all hope for that, and we can just get back to getting along and moving forward. I do want to call out a very, very, very important video from yesterday. That's why I have the orat.steadlypartner.com on the screen. I interviewed Darren, the CEO of Steadily. We talked about the California fires. We talked about what is likely to be some very dark days ahead for California owners of real estate. We talked about tremendous losses. But in that discussion, Darren, the CEO of Steadily, had two very important messages. One, if you are a homeowner in California or Florida, Darren's advice is very simple. If you have good insurance today, stay put. Darren highlights that the simple act of getting a quote or seeking other alternatives might set you up for a cancellation. So again, watch the video, understand that. Second, and perhaps more important, the other 48 states, so ex-California, ex-Florida, the other 48 states, if you own rental properties in the other 48 states, you should be going out and getting quotes because insurance is deflating. This was brand news to me. I only own rentals in California, so I did not know this. But Darren let it be known that the last year or so, they are seeing insurance rates in the other 48 states go down. So if you want to check out if you might get better insurance at better rates, you can go to that link on the screen or at .steadlypartner.com. They will help you. To date, about 50% of you are getting better coverage at better rates. The other 50%, it's better to stay where you are, but at least you know. And I think it is worth a 3 or 4 minutes of your time if you're in the other 48 states. But don't forget Darren's advice. Darren's advice to me is, as somebody who was putting in more and more properties to Steadily, is like, Michael, you're in California. You should really sit tight. You should really figure out what's going on. Don't open yourself up to cancellation, which Darren didn't have to say that, right? He's the CEO of Steadily. He would like to get more and more of my business, I am sure. But he's like, brother, stay put. Let's wait a year. We'll be around. Don't worry about us. Stay put. Don't get some cancellations, which I thought was really good advice because, again, he didn't have to say that. What else do we got? Let's talk about Wells Fargo. Economist Jackie Benson also coming out basically saying, Zuber, you are right again about the U.S. housing market. 2025 will be a tough year for real estate across the country as rates stay at or above 7%. Sellers and buyers are sidelines. Rates are not going below 6%. Although caveat, builders are actually bullish. Again, I have told you, there are only two winners in 2025 U.S. housing market. One, builders who build smaller and entry-level housing. Builders are doing pace over profit, and they know exactly how to sell new homes. I'm sitting in a new home as an example that they knew how to get me. It was payment-based. Builders are going to win. The other people are going to win. You and I. You and I are investors. You and I know our buy box. You and I know what a great deal is. You and I will write seller financing. We will do 50-40-10 with Velocity Mortgage. We will, do seller financing. We will do what we do as investors, and we will create great deals. So again, 2025, builders who go small, entry level, and investors who do the work. A couple more points I will throw out there as we wrap up this great session. I got this note from Lance Lambert at Resi Club. Go to Resi Club Analytics. He is a great follow. Lots of free material. 96% of mortgage holders in the United States have fixed rate debt, which means our shelter costs are fixed. And that is, as wages increase, we are seeing more disposable income or savings. That is why you are seeing asset owners have fixed rate costs are winning by more and more. The last thing I will highlight, a wonderful follow on X or Twitter, is the FI couple. The FI couple on X or Twitter put out a tweet today that I thought was interesting. 5 cities where you can buy a home for under 300 grand. I don't know anything about these cities, but I thought it was worth sharing as we wrap up this episode. They highlight Green Bay, 257K. Albany, New York, 265K. Fort Wayne, Indiana, 228K. Abilene, Texas, 235K. That one shocked me. I didn't know you could buy something in Texas for under 240. Albany, 235. And finally, Pittsburgh coming in at 245. So again, give the FI couple a follow on X. They put out a lot of great information, folks. And if you are still watching, wow, 218 of you, you are amazing. Thank you for being here. Do me a favor, hit that like button, hit the subscribe button. We are almost to 67,000 subs. It would be great to get to 67,000 subs. I think I need 40 more great folks joining the family. So if you could do that for me, that would be great. Again, remember Darren's advice from Steadily, the CEO. If you are like me and you have real estate rentals in California or Florida, stay put. Don't open yourself up for a cancellation or a non-renewal. If you are in the other 48 states, might be time to get a quote, because if insurance rates are truly deflating after a couple of years of increases, go get yours, would be my opinion. And again, the link there will help you do that, or at .steadilypartner.com. Folks, take care of yourself. Have an amazing day and just smile. Later.